Hello, everyone, and welcome. Thanks for joining us today for our Financial Information for Tax Time webinar. My name is Chris, and I'm a Financial Information Service Officer with Services Australia. I'm joined by my colleague, Sam, and we will be your hosts for today's webinar. So today we're going to be walking you through some practical, plain English information about how tax works in Australia, what people often need to think about at tax time, and where to go if they need more help. This session is designed to be informative and useful, whether tax time is something you feel confident about or something you'd rather not think about until it's absolutely necessary. Either way, get the highlighters ready, calculators out, and let's do this. Now, before we begin, I'd like to acknowledge the traditional custodians of the lands we're all joining from today, and I pay my respects to elders past and present of all Aboriginal and Torres Strait Islander nations. If you know the country you're joining from today, you're very welcome to acknowledge that where you are as well. Now, to help answer questions throughout today's webinar, we have staff from the Financial Information Service supporting the session. If you're watching live, please feel free to use the Q&A feature on the top there as we go. To protect your privacy, please ensure you tick the box to ask your question anonymously. If you don't, we may not be able to publish your question. If your question is something particularly specific to your own circumstances, we may suggest following up with us separately afterward so you can talk it through privately. And if you're watching the recording later, any key links or references are usually included in the summary information. Now, just before we get into tax itself, a quick reminder about who we are. Services Australia provides the Financial Information Service, often called FIS. FIS is a free, independent and confidential service that helps people understand financial matters, including social security, superannuation, investment choices, and tax implications as well. A line we often repeat is, it's information we provide, not advice, which means we can explain how something works and what the rules generally are, but we don't tell people what decision they should make. Now, our role is to help people understand their options so that they can make informed choices for themselves. Now, today we'll be covering 5 main areas: tax in Australia, income tax, tax returns and deductions, choosing professional help, and online services. So if you've ever wondered where tax fits into the bigger financial picture, or why tax time can feel simple for some people and a bit more complicated for others, we'll touch on all of that today. Now, as always, a quick disclaimer. Before we dive in, the information in this presentation is a guide only and is general information, not personal advice. You'll need to consider your own circumstances before acting on anything we cover today. This presentation is accurate as of the 30th of July 2026. However, tax rules, thresholds and processes can change over time, so it's always worth checking current details through official sources. So let's start with the basics. What is tax? Tax is money collected by the government, and in Australia, it's collected by the Australian Taxation Office, or ATO, on behalf of the Australian government. That money helps fund a whole range of public services and support systems, things like healthcare, education, roads, public infrastructure, defence, welfare payments, pensions, and disaster support. So while nobody gets excited about paying tax, most people do use these things every day that are supported by it. When people hear the word tax, they often think of income tax only, but there are several common taxes in Australia. On the slide, we have listed income tax, GST, capital gains tax, fringe benefits tax, and superannuation related taxes. Some of these are things people see regularly, and some are more behind the scenes. Some taxes are paid automatically, while others require reporting or assessment through the tax system. Now, today, our focus is mainly on the tax issues that are most relevant to individuals at tax time. Now, in Australia, we use what is called a progressive tax system, which means people with higher incomes generally pay a higher rate of tax on parts of their income. Now, a common misunderstanding is that moving into a higher tax bracket means all your income gets taxed at the higher rate. And that's not how it works. Only the part of your income above the threshold is taxed at the higher rate. The amount of tax a person pays can depend on a few things, including whether they're an Australian resident for tax purposes, how much income they earn, whether they have more than one job, and whether they've provided a tax file number or TFN. So your tax file number or TFN is your unique personal reference number for tax and superannuation. It's free to get, and ideally people should apply for one before they start work or soon after. This is important because your TFN, more tax, without a TFN, I should say, more tax can be taken out of your pay than usual, which we don't want. And a TFN is also required when receiving a Centrelink payment. Without your TFN, if it's not supplied, it could result in a suspension of your payment. So it's also worth remembering that a TFN is an important piece of personal information. So once you receive it, it should be kept secure and only disclosed when genuinely needed. Now, it's worth noting that income can come from many different sources. It can include employment income, business or rental income, foreign income, income streams, and there are also other forms of earnings as well, such as share dividends, bank interest paid, just to name a few. Now, from a general information perspective, one thing that tends to catch people out at tax time is this assumption that if money didn't come from a standard wage, it somehow doesn't count. However, the reality is that income can take many forms and different rules can apply depending on the source of this income. Now, most of the income a person earns will be assessable income, which is income that can count for tax purposes. Some examples can include salary and wages, some allowances, investment income, pension income, rent, bonuses, overtime, and certain other payments as well. Now, a useful way to think about taxable income is this. It's your total assessable income minus any allowable deductions. So deductions don't directly reduce tax dollar for dollar. Instead, they reduce the amount of income that tax is calculated on. And that's why deductions matter, but also why it's important not to overstate what can actually be claimed. For most employees, tax is generally taken out of wages by the employer before the employee is paid. That system is known as payee withholding. The tax withheld should show on the payslip, and by the end of the financial year, the income statement or payment summary will show total income and the total tax that has been withheld. If someone starts a job before they have their TFN, they generally have 28 days to provide it, and if they don't, the employer may need to withhold tax at a much higher rate. Now, a payslip can tell people a lot more than just what came into my account. It can show gross pay, net pay, tax withheld, super contributions, leave balances, and any deductions or salary sacrifice arrangements as well. And this is why it's a really good habit to look at a payslip now and then, rather than just assuming that everything's fine because the number in the bank account looks about right. Now, the tax-free threshold is the amount of income most Australian residents, for tax purposes, can earn before paying income tax. So at the time of this presentation, that's $18,200 per year. The tax-free threshold is usually claimed through one employer or payer, and that becomes particularly important for people with multiple jobs. If someone claims the tax-free threshold with more than one payer, they can sometimes find that not enough tax has been withheld overall, which may lead to an unexpected tax bill later. So this slide is a good reminder that multiple jobs can mean a bit of extra care needed. Now, to one of the most attention-grabbing tax topics, deductions. The basic rules are shown on this slide. A claim generally needs to relate directly to earning income. The person must have paid the expense themselves, and they need to keep records or receipts. Now, if they were reimbursed, they usually can't claim it. And personal expenses are generally not deductible just because someone happened to think about work while buying them. Now, deductions can include work-related expenses, but there are also some other types of deductions that we will go through. And this includes such things as gifts, donations to deductible gift recipients, some personal super contributions, and the cost of managing your tax affairs as well. As you can see, we have provided some common examples of work-related expenses, but these can also include, as per the slide, union fees, protective clothing, there's tools and equipment, self-education costs, home office expenses, and also professional subscriptions. But, and this is the important bit, just because something is useful for work or an employer has suggested it doesn't automatically make it deductible. The expense needs to have a close connection to earning the income, and if there's a mix of work and private use, only the work-related portion can generally be claimed. So this is one of those areas where a bit of caution can save a lot of headaches later on down the track. So keeping track of your expenses will come down to good record keeping. And although not glamorous, it does make tax time much easier. Receipts, invoices, and bank records all help support deduction claims, but please remember that records generally need to be kept for 5 years from the date the return is lodged. Now, worth noting also is that digital records can be stored using the My Deductions tool that you can find in the ATO app. Now, one practical message here is, and I am speaking from experience here, don't rely on memory. I'm sure it was about $400 is not the strongest tax record in the world. Now, some of you may already be doing this, but salary packaging, also known as salary sacrificing, is where a person and their employer agree that part of the person's salary will be exchanged for certain benefits, often before tax. This process can help reduce taxable income in some situations. However, FIS would always remind people that salary packaging does not suit everyone, and it's not something that we advise people to enter into or avoid. We explain how it generally works, but people should be comfortable that they understand the arrangement before entering into it. Now, salary packaging can include a range of benefits such as super contributions, vehicles, phones, electronic devices like laptops, childcare fees or tools of trade, depending on the arrangement. Now, the key point is that the benefit is replacing part of what would otherwise have been salary. And because these arrangements can vary a lot between employers, it's important for people to understand exactly what they're agreeing to and how it affects both tax and take-home pay. Now, remember that although salary packaging may reduce taxable income, there are contribution caps that may apply in some cases. And more importantly, it may not suit everyone. Also, with salary packaging, the arrangement generally needs to be put in place before the work is done, and the person must genuinely give up access to that portion of their salary. So this isn't just the case of, I got paid and then decided to call it salary sacrifice. As you can see, the structure does matter. Now, another benefit that is available to employees is the fringe benefits tax, or FBT. This is tax paid by employers on certain benefits they provide to employees, and it can affect the value of a salary packaging arrangement. Now, some common examples of fringe benefits include things like cars, goods, or payment of certain personal expenses. So while salary packaging can sound attractive, it's never quite as simple as free tax savings. There can be extra layers involved, and that's why understanding the arrangement is very important. Now, what about our self-employment contingent? Being self-employed, the tax obligations can feel different because you no longer receive wages from an employer. As sole traders, they are responsible for reporting their business income, their own tax obligations and record keeping, and may need an Australian business number or ABN. And in certain situations, are required to be registered for goods and services tax or GST. Now, a sole trader is also personally responsible for the business, including its debts and obligation. So it's a straightforward structure, but not necessarily a simple one in practice. As highlighted, one of the biggest differences for sole traders is that there's no employer withholding tax for them in the way there is for employees. That means they usually need to set money aside for tax themselves, and business income is included in their personal tax return. They may also need payee installments, may need to lodge business activity statements, and will need to think about GST and superannuation in different ways. So this is often where people move from tax is annoying to tax is actually part of running a business. I finally get it. Now, some common deductions for sole traders can include the following. You've got vehicle expenses, home office costs, phone and internet, equipment and tools, insurance, and professional expenses. Also worth noting is some of the common mistakes that sole traders make when completing their tax, and this can include not reporting all income earned, overclaiming expenses, getting losses wrong, or failing to keep record. And that's a good reminder that for sole traders, being organized is not just a personality trait, it's often a tax strategy long term. Now, the goods and services tax, or GST, is a broad-based tax of 10% on most goods and services sold or consumed in Australia. As discussed previously, some businesses will need to register for GST, generally once they reach the turnover threshold. However, there are some industries that need to register regardless. Now, businesses that are registered for GST may include GST in the price they charge and may also be able to claim GST credits for business purchases. For many people, GST is one of those things they've seen 1,000 times without really needing to think deeply about it until they start a business. Now, capital gains tax, or CGT, is a hot topic that people often discuss. And there is a perception that CGT is this separate tax, but it is in fact part of a person's income tax. CGT can apply when someone disposes of certain assets, and that can include shares, crypto assets, and investment properties. Now, good records are especially important here because capital gains and losses need to be worked out from what was paid for the asset, what it was sold for, and may need to cover other adjustments as well. If there's a gain, it may increase your tax payable, and if there's a capital loss, it may be used to offset any future capital gains. Now, if you receive a Services Australia payment, there could be tax deductions from eligible payments. Some payments are taxable, and in some situations, a person may wish to have additional tax voluntarily withheld to help avoid a tax debt later. This can be especially relevant where someone also has wages or other taxable income throughout the year. So a good reminder is that not all payments are taxable, and some payments won't appear on a Centrelink payment summary, even though they may still need to be considered separately. So one of the messages here is don't assume every payment is treated the same way just because it came from a government agency. I will now pass you on to my colleague, Sam, who will take you through the Centrelink payment summaries and what you need to know about your tax returns and the offsets you may be eligible for. So over to you, Sam.
Thank you, Chris. And hello, everybody. I'd also just like to point out that we have dropped a poll into the webinar today. So if you are feeling adventurous, have a look and provide an answer. On the screen now is an example of a Centrelink payment summary, which provides information about taxable and non-taxable payments received from Services Australia over a financial year. And it can also show how much tax has been deducted. It is important to note that some payments don't show on a payment summary. So a person may still need to check carefully what they've received and whether anything else needs to be reported separately. The main thing to take away here is that the payment summary is a useful tool, but it's not necessarily the full story for everybody. People can get a copy of their Centrelink payment summary through their Centrelink online account linked through MyGov, through the Express Plus Centrelink mobile app, via our phone self-service, or by visiting a service centre. It's also worth noting that if tax is being withheld from an eligible taxable Centrelink payment, that's generally a clue that a tax return still needs to be lodged. And on the slide now is the timing. Services Australia provides payment details to the ATO by mid-July, and those details are usually available as pre-fill information in My Tax towards the end of the month. So if you're somebody that's logged in early and thought, nothing's here, where is everything? The answer is usually it's simply not there yet. Waiting until information has been finalised can make the whole tax return process much smoother. And now we're on to the main event itself, which is the tax return. Now, a tax return is essentially an annual report to the ATO showing your income and any deductions being claimed. The ATO will then use that information to work out whether you have paid too much tax and are due a refund, or perhaps not enough tax has been paid and there's an amount owing. For most individuals who need to lodge their own return, the standard due date is the 31st of October, unless you're using a registered tax agent and you meet a few relevant conditions. My Tax is the ATO's free online tax return service. A big benefit of My Tax is that it includes pre-filled information from employers, financial institutions, government agencies, such as us here, and other sources by late July. It's available online, it can be used on a range of devices, and for many straightforward returns, it's the most convenient option. It does also let people estimate whether they might receive a refund or a debt before they lodge their return. So for most people, My Tax is the main route through tax time. Before lodging a tax return, it always helps to gather what's needed. And Chris has spoken at length about, record keeping and making sure you've got your details handy. Now, this could include income details, deduction records, bank accounts, any private health insurance information, and if relevant, your spouse's income details. This is one of those sensible reminders that basically says a bit of preparation now can save a lot of frustration later. And I think that most people would agree tax time is usually easier when you're not trying to hunt down your documents 5 minutes before trying to lodge your return. We'd also like to remind everybody that income to declare can include more than just wages. Again, it can include interest from bank accounts, investment income, income from a side hustle, rideshare, delivery, government payments, and foreign income. Now, a lot of this does pre-fill, but not everything always does. So if you are a person who has earned money in a less than traditional way, perhaps through a side activity, online work, short-term gigs, or investment income, it pays to take a little extra care. Here are just some of the potential outcomes after lodging a return. If too much tax is being withheld, there may be a refund. And again, if not enough has been withheld, there may be a debt. Now, this can be more common where somebody has multiple jobs, mixed income sources, or is self-employed. The notice of assessment that the ATO provides to you will explain how the return was assessed and whether there's an amount payable or if there's a refund. Check this notice carefully because it's the official summary of how all of these numbers were worked out. And if you have questions, that'll be the document to refer to. We can't talk tax without looking at tax offsets, and we'll start with SAPTO, the Seniors and Pensioners Tax Offset. Now, we have covered this in some of our other webinars as well, so make sure you go and check those out. But for today, we'll point out that SAPTO can reduce the amount of tax payable for eligible people. In some cases, it can even reduce it to zero. Your eligibility depends on things like your pension or allowance status and income, including your spouse's income in some cases. We won't labour the point, but the key thing to take away is that there are tax offsets that may make a very real difference for some Australians, and SAPTO is an important one to be aware of. On the screen now are a few other tax offsets or tax-related items that people may hear about. You have the low income tax offset, the low income super tax offset, refund of franking credits. Now, again, we don't need to go too deeply into each of these today, but take the slide as a useful reminder that tax time is not just about what a person earns. It's also worth considering what credits and offsets you may be entitled to and how those can affect the final outcome. Now, here's a phrase that tends to make people sit up a little bit: unclaimed funds. What we're doing here is pointing out the fact that there can be large amounts of lost or unclaimed super and also other unclaimed funds in other systems. The idea is simple. Sometimes money that people have forgotten about or lost track of may still be out there under your name somewhere in the world. If you are somebody that hasn't looked into your old super accounts or other unclaimed amounts for a while, such as Medicare rebates, tax time can be a really good prompt to do some of that housekeeping. Now, if today's webinar has left you thinking, okay, I understand more, but I still feel like I need some help, here's Tax Help. Tax Help is a free service provided by volunteers trained by the ATO, and it's designed for people with simple tax affairs. It's generally available from late July through to October. Now, it won't suit everyone, especially people with more complex or involved situations, but for those of you with straightforward returns, it can be a really useful option. However, if, again, you do have more involved circumstances, an accountant may be useful. If somebody has multiple income sources, investments, rental properties, complex deductions, self-employment income, or is lodging their return late, that can be a sign that professional help would be worthwhile. If your return is simple, then you may very well be comfortable lodging it yourself. But as a general rule, the more complex that the overall picture becomes, the more value there can be in getting that expert support. And on the other side of that coin, so to speak, are registered tax agents. A tax agent is a qualified professional who can help prepare and lodge a tax return. But importantly, they must be registered with a tax practitioners board. We'd also like to remind people that when they use a tax agent, they are still responsible for the information they provide. Using an agent is a support only. It's not a handover of all your responsibility. It is useful to know that registered tax agents have access to lodgement programs and may be able to lodge after the 31st of October, the due date, for eligible clients, but that will depend on when you originally engaged with them. It's safe to say there's a lot of different places you can go for help. And on the slide now, we have some of the more common options. We'll remind you that there is the Australian Taxation Office itself. You can visit MyGov, visit MoneySmart, use the Tax Help program, and you can access registered tax agents or us here at the Financial Information Service. In other words, if today has been useful, but has also raised a few questions, there are plenty of places to keep learning and get the right kind of support for you. Now, before we wrap up today, we will take a look at some of Services Australia's self-service options. On the slide now is a quick overview of some of the tools available, including our Express Plus mobile apps, MyGov, and our phone self-service. Our goal here is to make routine tasks easier, faster, and more accessible for people who prefer to manage things online or by phone without the need to visit a service centre. Here's something to think about. Most people already use self-service in everyday life, even if they don't think of it using that term. We're talking things like banking apps, shopping apps, airline check-ins, even doing your groceries these days, and so on. Government services are increasingly being built with that same expectation in mind. Of course, that doesn't mean that everybody has to do everything online, but it does mean that there are more options available for people who want the convenience and the flexibility. Now, when using our online services, MyGov is the main online access point, not just for us, but for a lot of government services. It lets people link services like Centrelink, Medicare, child support, and also agencies such as the ATO using the one account. We'd also like to make note of the MyGov Digital Assistant, which is available to help users navigate common questions and tasks. For most of you, if you're doing things online at tax time, MyGov is going to be your front door. Now, some people may also want someone else to help them deal with us here at Services Australia. This could be a nominee, a person permitted to inquire, or a person permitted to update. The type of arrangement will depend on the type of help that you feel you need. It is important to note that choosing somebody to assist you does not stop you from continuing to deal with us yourself. It simply adds the support where it's needed. And of course, if you are somebody that doesn't always find online services intuitive, or maybe computers just aren't really your thing, we do have plenty of online help guides, videos, and step-by-step resources. These can be of great help when setting up MyGov, linking services, updating your details, reporting changes, and doing common tasks online. We'd also like to make note of Be Connected, which can help people build broader digital skills and confidence. So there's quite a bit of support available for those who want to become more comfortable online. And we can't talk about help without doing a shameless plug for us here at the Financial Information Service. FIS can help people make informed financial decisions, understand concepts like social security, tax, superannuation, and prepare for a range of future financial choices. As Chris has said, the important distinction is that FIS provides information only. We do not provide personal financial advice. But for many people, simply being able to understand rules and implications and having things to think about is exactly the confidence boost that they need. If you would like to speak with a Financial Information Service officer after the webinar, call 132 300 or any Centrelink number and say Financial Information Service when prompted. If you're lucky, you might even get Chris. On the slide now are also some other ways that FIS engages with the community. So that includes video chats, face-to-face appointments, community outreach, webinars, and presentations. So if you are a person that prefers or indeed needs a conversation rather than a web page, there are a range of options available. And we can't host a webinar without talking about Money Smart, which is a great resource. It's an Australian government website run by the Australian Securities and Investments Commission, or ASIC, and it offers free tools, calculators, and guidance to help people make informed money decisions. It's particularly useful for people such as myself who like to compare their options, maybe test a few scenarios, and build their confidence with financial concepts in plain language. And lastly, Services Australia has a range of other support lines and services for you, including the Centrelink Indigenous Call Centre, again, Financial Information Service, the Multilingual Phone Service, Grandparent, Foster, Kinship and Care Advisors, our aged care specialists, our social workers, and the Farmer Assistance Hotline. The main thing to take away here is that there are different support pathways depending on your own needs, your circumstances, and your preferred language or channel. Thank you very much for joining us all today. We hope that this session has made tax time feel a little clearer, hopefully a little less intimidating, and definitely more manageable. If you do have questions that are specific to your own situation, we encourage you to follow up with the right service, whether that be the ATO for tax questions, a registered tax professional for personal tax advice, or us here at the Financial Information Service for general information on how tax interacts with Social Security, super, and broader financial matters. Take care, stay safe, thank you for your time, and we'll see you at a future webinar.